Welcome to Trading Lounge and the US indices and a few stocks for the 25th of February. So with the S&P here on the 4-hour chart, we'd been looking at this as wave 1 here with an ABC back for wave 2 and then continuing to move higher at this point. So just to be sort of safe, the current move down through here is currently trading above the 61.8%, but that's not out of the woods just yet. We really need it to develop support on the 3,900, so that's what we'll be looking for. Above the 78.6, above this supply level in here, would also be a catalyst for further upside, but we are on the right track. So today we'll go in and explore this particular pattern and also the beginnings of this one here. We have a couple of long positions in here already from yesterday, and we'll also compare the Nasdaq. Now the Nasdaq was a little bit different because the Nasdaq actually dropped right down through here, not quite taking out the low there, and then pushing up from that point. So for the time being, I'll just call it the same count, so to speak, as 1 and 2. Let's just have a look at that before we head off, because I'll need to justify that to you as well. So from wave 4 here, so wave 1 and wave 2, you can see how low it came back in this case. So I could be wrong with this, so we'll just need to see it move up higher. But it's kind of got a little impulse wave here in terms of 1, 2, 3, 4, 5 here. So we'll need to see that push up past this here. So any stops that you have in the market for this would need to sit here, because it could be an A and a B and a C wave to here and drop from that point. So that's what we need to, you can go long off this. It's a nice setup on the 13,000. It's got a nice support. It's got a place to put the stop. You can go long above the top here. But let's go and have a look at the S&P. We'll pull the S&P apart first. That will be easier. So where are we? So we'll go from the 4-hour to the 1-hour and then the tick chart here. So yeah, this is what we're looking at here. So for the S&P, wave 1 here, an A and a B wave here, and then 1 and 2 and 3 and 4 and 5. We'll pull that away. We'll pull that apart a bit further in a moment. But we talked about this reaching the 50-60% retracement level, and of wave 5 of C of 2 here, and yeah, then moving up from here. So we'll need to clean this up a little bit in here for this. So it's starting to look like a bit of a 5-wave structure here. So we still need to leave the stop out of the way here, because if we'll take a look at this in a bit of detail. If we take this as a bit of a wave 1 to the upside here, I'll just borrow that. Then we'll need a wave 2 to come back somewhere in here. So that's, I think, yeah, all of that there's the support. Okay, so move that. We don't need this one here anymore. We're above that, but we do want that to become the support as well. So we really need to leave the stop, under this level. We can move it up a little bit through here, because I'm just assuming we may have 5 waves in there already. I'll just go in and check here. So we're just going to go into the tick chart, 100 ticks. A little bit clearer here for this, so we can track this down as wave A, B, and 1 and 2 and 3 and 4, and nice 5 waves in this last section here, 4 waves. So we've got this 1 and 2 here. Probably looks like we've got 5 waves here, but we've got 1, 2, 3, 4, 5, 1. No, we've got, okay, so 1 and 2 and 3. We'll have to call this 4 and 5 here for the 3rd wave, 4th wave, and 5th wave here. So we'll might probably need to check on that, but just map out some type of little structure here. I suppose we could look at it as two as an A and a B and a C up. Let me just check on this. This is corrective, so that's still got further to go up there. But what's that? That's 1, 2 here. 1, 2, 3, 4, 5. So what's up here then? So we've got not that one. I'm just going to put in the sub levels. So we've got the midpoint 50, 30, 20, and 10. So in the Fibonacci sequence of numbers, it's just really 1, 2, 3, 5, and 8 up here. But with 8 up here, we can also put in group 2, which is 65 roughly, and 72. So there are our sub-levels to the upside. If we get support on top of 30, then we get to 50 here. I just need to think about this for a second. I don't want to burn up too much time here. Must be a little wave 4 here with a wave, or maybe not. Just got to get my head around this. Okay, so we've got 1 and 2 to here. 1 and 2 to here. Can't get my brain working this morning. Anyway, not to. My main point here is that let's just squash this back in a little bit. Let's just assume for a moment that we go above. Well, I'll take it from there. That still leaves us at that price. Better just take it from the top of this top, but it can just have one more top up through here, I think. But we'd be looking for an A and a B and a C wave coming back. Not that it has to come back to the 61.8%. It's likely to come back into this like block. This is all this block here is the support here. So anywhere in there would be fine for a pullback, but technically it can come down to this area here, so that's why we need to leave our stop out the way. Okay, I'll just leave it at that. But yeah, it does appear that we're looking at the move to the upside here. There's 1 and 2. So if you're not long already, then you really need to wait for this pullback in here and then start to look at it. You can either let's just assume that the market drops from this point and not this one. But if it's this one, then you can go that's your reference point, or this one can be your reference point here, so to speak. But it's really the B wave that you want over here. Or if you can get a nice correction, say like an A and a B and a C like this here, then you can obviously put that across here. So that's putting it across here as well for that. So that's sort of helpful. If it drops below the 3,900 here, then you can also look for a classic trading levels pattern to the upside. So just try and look for something of this nature here, and then move in over here for that, a little bit better and build in. But the idea is once we've got this retest, because the market hasn't retested the 900 here yet. So once it does that, then you can start building in. If you're lucky enough to get 900, that's okay, but then 10, 20 and 30 and then 50 at this point. Obviously the 4,000 is going to be a bit of a headache, but yeah, so we'll see how that goes at that point. Obviously, we could put a trend line through here as well. That might be that come into play. Alrighty. So what I want to do now is have a look at some stocks. So Facebook here. Now Facebook is a little bit twofold here. Facebook is I was going to say two-faced, but it's not very nice. It's possible that we've got wave 3 here with an A wave here, a B wave over here as an A and a B and a C wave here for the B wave, and then looking for 5 waves down here. If that's the case, we're looking down at 1 here and 2 here, and then down for 1 and back for 2 here, and 3, 4, 5 for the third wave, fourth and fifth. So that's possible. It's also possible, as my original count, as having wave 1 up here with an A and a B and a C wave coming back for wave 2 here. But we do need to push up from this point here. So we're going to go into the tick chart and just explore both of those counts. A little bit annoying that they're both in the opposite direction, but it will become very clear very shortly that what's going to occur here, and then we'll be able to pick up that thread. So on the bullish count, we've got wave 2 here with wave 1 up here and then coming back for wave 2 here. Okay, so it's a bit of a long shot because it's sitting right on there. Yeah, and the other count is that we have all of this down here as wave 1 with an and coming back for wave 2 here for this, and then moving down from that point. So there's a couple of different ways to count this particular rally here, but I do see just in here though that we've got another little push up here. So I think taking it to the 61.8% here, and then we should see the market have a turn, but we could also put that on top of that once that occurs. So we're considering that to be wave 2 top here, right? So all the way down for 1 and back for 2 here, and then moving down here further. So that would really be, once that top's in place here and the market comes down here somewhere and then goes back up, then you can go along at that point. But on the short side here, we can copy that. We would have had it here, then we can move it to here. You could probably move it a little bit closer as well, or look for a classic trading levels pattern on the bear. No, that might get you in trouble as well. So you could probably look for it at the 260. So that would be, it's not much better really. Looking for a classic trading levels pattern to the downside here for that, something of that nature. This can also come back up to here as well in 3 waves and then come back down as well. So just be mindful of that. But 260, you could start working the low. You could start working the low end. Yeah. So anyway, just another session here, and we'll have an answer for that. And Square, nothing to do here just yet. As you know, we went long here. Got stopped out here, but with a drop, unfortunately. That's just the way the cookie crumbles. And now I just really want to see what we've got here. I can see a lot of supports coming in on this low here, and we could just sort of move up. It's pretty much the 61.8%. It's also the supports through here. Yeah, look, we'll just give it a few more days. If it sits on the 250, the medium level here, because in a way, we've got the arrival, the reaction, the first high above the level. So we've got the classic trading levels pattern sort of developing across this level here, but we're still just over here for that, We still need to see either more downside and then some support over here and then go along again, but we're not there just yet with this. So nothing really to see here just yet. I just want to get more development in there. And Apple. So with Apple here, I was considering a top being in play here, and we'd have to move into 5 waves first. So that would mean 1 and 2 and 3, or we could probably use that as the 3rd wave low here, and 4 coming back up, and then 5 coming down here for that. So maybe I'll just tidy that up a little bit. So that would be the 4th wave here, and then down for the 5th wave coming into this space. If we do get this 1, 2, 3, 4, 5 here, then we're going to get this ABC pattern. Now I need to straighten that up a little bit. It's always just tuning it in a bit. So there'll be a 3-wave counter trend after that, maybe hitting supply, and then another 5 down for that coming into the wave 4 of 1 lesser degree. Now, saying that, the other point here is that what about if I've made a mistake? Because I don't have five. If I had five waves here, then I could call that point, that part in, and that part in. But because I don't have five waves here just yet, I only have three waves. So it's possible that the market can just move up from that point. So we need to take that on board. What we normally do is go, when we've got 100 here, then we've got 1, 2, and 3 that make up group 1. This is minor group 1, and we'd need a tested support on that there, because this is also really like classic trading levels pattern, sitting on top of group 1 here with the arrival, the reaction, the first high above the level, the ABC correction. So normally go along above here, and now we're trying to work the level down here in that space. So we'll have a look at this on 100 ticks as well. So yeah, so in this case, a slightly different count here, but on the tick chart, but wave 3 here with an A wave, a B wave, and then we've been tracking this C wave down. So 1 and 2 and 3 and 4 and 5 here. So it's possible to have that in play. It's not looking that good as a bullish count. It's okay as long as that one there stays in play, because we could look at this as an A and a B and a C wave as a corrective move, and then moving down from that point. And this does appear to be like an impulse wave down here, so it's quite likely to drop through there. So you could also look to short below that level there as well. Just saying, that would trigger the short trade if you're interested in that. The long trade, as I mentioned, it's also at the 38.2% retracement level, so that can be our little fourth wave here. So we could just pop that there. Probably I need to go a degree higher, but it doesn't really matter, just for the sake of counting. So we won't be interested in going long in this unless we're above the 130, or we can see an impulse wave off the low here, and we don't see that. Maybe developing as 1 and 2 and 1 and 2, and then going up again, but it's not there yet, so can't do anything with that. So Alphabet, I'm also playing a couple of games here. As I mentioned yesterday, it is possible to have a top in play here, but highly unlikely. So we don't need to worry about that too much. So I've got this bullish count here, but on the tick chart I've got another bullish count as well. So it doesn't really matter. All we need to do is we need to be, well, we're long at the moment, and we've kept our stop out of the way. So we need to look to go long again, really. So let's just go to the tick chart, which will have a different count, but that's okay as well. So 100 in this case here. So yeah, slightly different, a slightly different count. This one was my original count, but I felt that it was a little bit conservative having 1, 2, 3, 4 here and going up for wave 5. So my conservative count. It's also having the extension. It's also having the extension in the fifth wave, from fourth to fifth wave, which I don't think is the case. I think it's more like this third wave should go over here, and this green wave 1 can go here, and so on. So I'm just counting it the most conservative possible way that I can. That's all I'm doing here. So we'd been counting up through here as a little wave 3 here. We've got our little wave 4 back. So we should be chuffing off into wave 5 here. This wave 4 can pull back to the wave 4 of 1 lesser degree. Probably won't, but we'll come sit on probably the 100, depending on how much distance we get into this here. But the extension's in wave 3, so wave 1 here and wave 5 will be roughly the same. So we could just probably pop that up a little bit further above that minor level 2 there. So major level, and then minor level 1, 2, and 3, and then onto the midpoint 5. So 1, 2, 3, 4, 5, 1, 2, 3, 5, 1, 2, 3, 5, 8. So look, you could go long here for this. Maybe I just need to have a closer look, if that's okay. I'll just go to 20 ticks, see if we can get into that space there. does look a bit like 5 waves there in an odd way. I mean, obviously that looks like one structure there. This one here maybe 1, 2, 3, 4, 5 down to here, and then this one here of 1, 2, 3, 4, 5. So it's possible to count this down as 5 waves here as the one. Oh, I just missed that, didn't I? Five waves to here, to here, to here, to here, to here. So that is 5 waves. So we'll just need to be a bit more careful. So, oh, hang on a second. That's okay too, actually. Still, I'll just finish this off here, and then I'll just explain something else that I just saw. So, well, we're right on the 61.8%. So that's kind of good news. So really we could, I don't really have a nice impulse wave up here either, so we just need to be a bit mindful of that. I'm sure it can be counted, you know, as 1s and 2s and so on, but if we use this number here, 2,100, that's where we can go long from. So we can expect some sort of arrival reaction, first high above the level, something or other. We just need that first high above the level here. So these couldn't do it. This one's established itself. So we could go long above here, and we can also go long above this one. So let me just, we can go long above here. We can go long above here. But what I was also thinking is this hasn't finished up here in 5 waves. So this high here, right? So wave 3, 4, and 5 here. Then an A wave here, 3 waves here, because this is an A and a B, and then 1 and 2. Probably all of 1 in here. All of 1 in here. 3, 4, 5. So maybe we've got an A wave, a B wave here, and expanded flat for the wave 4, and then we've got our C wave here. Either way, we know that there's a bit of danger here, so we just need that 2,100 to have support, so you can go long on that point. And Amazon. So I've just got 2 counts here. I know it's annoying, but it's possible, still possible to have wave 4 here with wave 1 up here and ABC back for wave 2. But we do need that low to stay in place here. So yesterday I said we'll just wait for that. So we've got an inside bar here, but we can also look at this as wave D here, and we may need to be looking at it coming down a little bit further here. So I just want to see how this develops for a few days. We've got plenty of time. We normally go long here and then here. We could go long here, but I need more evidence just yet. So we could fade away down for one more low here. So I'll just have to leave that. And Tesla, I think we've got a low in for Tesla. So there's 2 things I want to have a look at here. So from wave 3 here, we can look at this as 5 waves down for wave A and then B here. And our job now is to count the 5 waves down. If anybody's got a different count, please let me know. So 1 and 2 here, and all the way down here for 3 and 4 here. And then we've just seen this extension in wave 5 here. So 1 and 2 here, and then I've counted down here as 1, 2, 3, 4, 5 in here for this, and then dropping down in here for the 5th wave, 1, 2, 3, 4, 5 here. So we can possibly have a low in place here. We've got a nice classic trading levels pattern sitting on the 700, the arrival, the reaction, first high above the level. So we could go long here, we could go long here, and we could also go long here. Now, I know that's just hindsight, but I'm just explaining to you how it migrates from being resistance to support, and then how we move in on these things. This is also a classic trading levels pattern here, the arrival, and this is important too because this is 700, nice big whole fat number. Then we've got 1, 2, 3, so we've got group 1 here. So getting support on group 1 will separate the order flow from being pulled back from this number here. So once you get tested support here, then we can forget about this number, because the market will be thinking of this number here, the 5, the second strongest number. The 3 is probably the 4th strongest number after 8. So 1, 5, 8, and 3. So the arrival, the reaction, the first high above the level, the ABC pattern. So normally what we could do here is we got the first high here, so that means that we could go long here, then we can go long here, and you may be able to get another little classic trading levels pattern or something in here. But now that's triggered. This one here is a little bit at risk, but what this one does, when this is breached here as an ABC here, once that's breached here, that confirms that this is an ABC, and that top will eventually be taken out. We may end up suffering an A and a B and a C wave back down here again, but because that's in 3 waves, we will be going higher again. So it's good to know that, because then you can take the heat on the wave C here and also look to build back in over here as well and build more positions in as such. So are we going higher from here? Well, I've counted this down as an ABC pattern. We could look at this as being corrective, or we could look at it being impulsive. So yeah, so on the daily chart, so just to recap here, it is possible to call the low in here for this as an A and a B and a C wave. It's also possible to look at this as wave 1 here, wave 2 here, and wave 3 here. Okay, so I've just got to point out all these things, and we just need to work through them. So wave 3 there, which would make this a wave 4 up here. And so from the top here down to here. So unfortunately, oh, okay, no, that's better. So we've got the 38.2% here. When things do go a bit parabolic to the downside here, or well, I'm talking about the downside rather than the upside, but because when we talk about parabolic, it's normally to the upside. But when something like the 5th wave drops off really sharp here, sometimes we do get a strong rally that can take us back to the 50 or 60% retracement level. So we'll need to be a little bit mindful of that. So what could happen here is that this can be, if we were considering wave 4 here, for example, we could consider this wave A and wave B here, and then 5 waves going up here. So we've got this wave 1 here, wave 2 here, a smaller wave 3 here, a wave 4, and then wave 5 here, and then fading from that point. So this 50% level is going to be really critical at this point. So just keep that in mind. But otherwise we can look at this trending further to the upside. But if it's going to fail, we've got past the 38.2, which is good, but because of the sharp drop off here, we'll have to be mindful of the 50% and any wave structure that can fit into that space. And that would be the A wave, the B wave, 1, 2, 3, 4, and 5 diminishing here and then dropping. So yeah, that low would, you can keep your stop here for this. So maybe just one small trade here, and then look to build on here on the 750 as a classic trading levels pattern here as well. So wait for that first high above the level, and then we can build back in. You can, anybody, whatever, build back in over here as well. And then we just need to keep the stop out of the way. So we'll just make some. I think we're just going to have it nice and tight here. We'll make the risk-reward ratio okay. So we'll just put it there, because if it's going to move up, if it's going to be bullish, then we want to see this as 1 and 2 and 1 and 2 and 1 and 2. These are all 5-wave structures, so 1, 2, 3, 4, 5. So we don't want to see these breached at this point, okay? So that will just keep a really tight game within that space. And we'll put this here. And I just want to have a look at the bigger picture for a moment, just to show you why that can be wave 4. And where are we? Get the brain working. So one day, yeah, when I wake up, I just sort of do some meditation and then roll into work. I work from home, of course. So yeah, this is what I was thinking here, that we just need to be aware of as 1 and 2 here and 3 here, and coming back up for 4 here, and then going down for wave 5 here to make A and then a B and then a C wave here. Probably not the case, but we need to lay all the patterns on the table and then work through them and eliminate them, and then look for trade setups and then try and make some pocket money. And the last one is lending tree. So yeah, as I mentioned yesterday, it's pulled back nicely as well. Let's just get the bigger picture here. So from this wave 5, we've got an A and a B and a C here. So that's corrective. So we'll be taking that top out. This is impulsive, so that's good. And this is corrective because that's in 5 waves here. That means that after a correction ABC, we should get another 5 waves over here. We have got 5 waves just here, so that should suffice. That could actually be an A wave down to here, and then an A, B, C here for the B wave, and then come down for the C wave here. So I'm mindful of that. So we're getting there. We just need to get past a few things. So really taking this top out here, or getting support back on this 350 level here, the midpoint, then that would take away that would turn it bullish at that point. We can dump that at that stage. I'll just see if I can make heads or tails of this little space in here, because I don't have, this is the last chart, so just see what it looks like on the tick chart. Not much to see there, not much to work out there on 100 ticks, so we'll just have a look at 20 ticks. Oh yeah, it's a little bit better. At least we've got some definition. We've got this move down through here, and this one here. So we could go, yeah, we could go long above this high here. Because that could be the A, the B, and the C wave here for that. I mean, it could just drop and fail from here, all of that sort of stuff, but let's just see. This looks corrective as well in here. It may drop back further, and it doesn't look like an impulse wave in here, even though it's sort of nice and strong, but we'll see. I don't think, let's just, no, I won't go to 1 tick, no point. So we can go long above that high, so that's at 340 there. And of course, if you're going to go long here, then the stop needs to just go under the level here. Don't put stops on whole numbers ever, because you'll only be attracting the market to you, right? So if you can imagine, because we haven't got another stock to do, then I'll just explain something here. So what's the best way to do that? So if you take 10, like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? Because then everything is the power of 10 after that, so it just builds on that, isn't it? 10, 20, and 30, and so on, to get to 100, and then 200, and 300, and so on. But even just say 1 to 10, so we know that the strongest number is 1, which is beginning at 1, and also 10 is 1 as well. 5 is the second strongest number, which is in the middle. So if you're going to go long or short, then you've got to work out, should I put the stop above 5 or below 5? That's the first thing that you need to do. So if you've got it at, if you don't ever put it at 5, so you need to come under 5. So you don't really want to put it at 4, because if you're working with 5, then you could spike down to 4 and get yourself into trouble. So most of my stops on the long side would be ending in the number 2. If it's not 2 and then I need to be above number 5, well, then I'll go at 6, because everybody will be thinking of 2 numbers above that, which will be 10 and 8. So when people think of 10, they don't really think of 9 or 11 that much. They'll be thinking of 10, and then they'll think of 8. So I don't want to put the stop at 8, and I don't want to put it at 7 in case I get stopped out because it's too close to 8. So I'll go at 6. You can do 7 in some cases, but you'll get better results over hundreds of trades putting it at 6. So all the long trades that you have should be ending in number 2 or number 6. They will give you the best odds. So when you break things down, so if you're breaking it down between this level between you got group 1 here, so I'm just rabbiting on here for a bit. So 10. So we've got 10 in here. So that means that we've got 5 here. So we wouldn't put a stop under, we wouldn't put a stop above 300 anyway, because it'd just be silly. So this number here is 3 or 4 here. So, if we had the stop at 6, we would have been stopped out. But if we had it at 2, we wouldn't have been stopped out. So the first thing that you do with your stops is that you look at the distance here, and then you go to the 61.8%, and then you say to yourself, okay, at the 61.8%, what's the closest largest number? And in this case, it's 10. And then so you're working with 10, so you know you don't put the stop at 10 anymore. You know that you don't want to put it at 9 because 9 and 10 are going to stop it out. So the next level down of support is 8. So then you say to yourself, well, Pete said, don't put it at 8 because if you look at the market depth, you'll see everybody's thinking about 8. So you don't want to put it at 7, so you have to come down to 6 here. So you're all the way down to 6. And then if you want to refine it at 6, well, then you just go under the 6 as well. Then you treat it as the same thing again. So you'll end up at 5 something or other, because you'll either be from 0 to 10 here. The first thing to ask yourself is, do I put it above 5 or below 5? That's the first thing that you ask yourself. So, and you can do that normally by finding your retracement levels and seeing how far you're away from the market and so on. Alrighty, won't wrap it on too much, but thanks for tuning in. Cheers.